Gold is giving us an extremely long daily cycle. So let's have a look at the details. Welcome to My Finance Teacher. If you had been following my channel, you know that all through January I had been warning everyone that this daily cycle on gold was stretching into a very unusually long cycle, and a bit of a correction down into the short-term daily cycle low was to be expected. All through February, we see gold is actually correcting down into this daily cycle low, and by now the cycle is already 116 days long. I don't think I've seen such a long cycle since at least 2015. So what it tells me on one hand is that some sort of a bounce into a new short-term daily cycle is to be expected very soon. And I actually mentioned about that a few days ago for the members at myfinancesteacher.org, where I had also mentioned that there was likely to be a retest and perhaps even a break below that recent low on the 17th of February. And just such a break below the recent low is what we are observing right now. But again, in the short term, the outlook is positive. On the other hand, in the intermediate term, the size of this correction tells me that gold has likely started coming down into the intermediate cycle low. Another sign here is that this ongoing intermediate cycle has already been going on for 152 days, and at the day of the top it had been going on for 127 days. Usually these intermediate cycles in gold last for around half a year, so topping at 127 days into the cycle is quite likely. And this notion of going down into the intermediate cycle low on gold does sort of agree with what's happening in US dollar. So let's have a look at that. And perhaps since early February, the US dollar has started a new intermediate cycle. The previous cycle lasted for 176 days. Usually these intermediate cycles in the dollar last for around a half a year, or sometimes often slightly longer than that. So while yes, it's still possible for dollar just to drop out of bed here and make a lower low, extending this ongoing intermediate cycle perhaps sometime past the half a year duration, which it often does, but I think it's more likely that the US dollar has started a new intermediate cycle, which aligns well with an intermediate decline on gold price. But within this decline, as the daily cycle has already been going on for extremely long, I do expect a bit of a bounce relatively soon. This bounce is likely going to be very modest, as gold will still be in an intermediate cycle decline into that intermediate cycle low. Perhaps a bit of a bounce to come somewhere close to that 50-day moving average before dropping down into a lower low, giving us one more daily cycle within this journey down into the end of the intermediate cycle. And looking at some technicals, if you look at the start of this daily cycle as well as the start of this intermediate cycle, all starting at around 1610 with this sort of a triple bottom, throwing on some Fibonacci retracement numbers, we see that there is perhaps some sort of a congestion confluence of support around the round number of 1800, as well as a 50% Fib retracement, and the 200-day moving average, all between 7076 and 1800. So a bounce, a very modest bounce, is likely perhaps over the next few days, and RSI is also becoming pretty depressed, close to 30. It's at 31.2. So gold is getting close to oversold, again suggesting at least a short-term bounce before a continued correction. Next, looking at market sentiment, this is Gold Optimism Index. As I had mentioned again in January and all the way back in December, I was expecting this optimism index to reach to the level of 60 before the intermediate cycle tops. Unfortunately, this optimism index only topped at the value of 57 back in late January, but that's pretty close to my expectation of breaking above 60, although it didn't happen. Market optimism since then has already dropped all the way down to the level of 42 right now. So while it's not enough for a larger degree intermediate cycle correction, this sort of a drop from 57 to close to 40 is likely enough for a shorter term daily cycle correction before a temporary relief rally. Next, looking at seasonality. Seasonality also aligns with our expectation of intermediate cycle correction during one more daily cycle. From the seasonality since 2015, we see that gold usually does peak sometime in late February and drops all the way down sometime into mid-March, with of course some temporary bounces on the way. Again, perhaps creating one more daily cycle with a bit of a relief rally very soon. And lastly, looking at silver, as you have asked about silver in the comments, my general view on silver is that it often does follow gold. Looking at seasonality here, the picture does look quite similar, where silver usually tops in late January to mid-February, and after that usually drops all the way down again into mid-March, with usually one short-term relief rally on the way. So looking at silver over here, we see RSI on silver is already at around 25, so silver is already oversold. And when we see such levels on RSI, looking at the history of at least a couple of years here, we see that silver does usually bounce from such oversold levels on RSI, although these bounces again can be temporary relief rallies before a continuation down into that intermediate cycle low, which will be a nice buying opportunity before that next larger degree intermediate cycle. And for that actual cycle low in the intermediate term, perhaps somewhere in late March, if I'm not mistaken, 22nd, 23rd of March, that's when the FOMC meeting will take place. Perhaps that is going to be a bit of a trigger for a new cycle, with market being split between 25 or 50 basis point hike. If we see the Fed hiking by 0.25% rather than by 0.5%, that again might be a bit of a helping driver for that natural bounce into a new intermediate cycle in precious metals. So that's my view on gold and silver. Now let me ask you, do you think that FOMC meeting might be a bit of a pivoting point from the downtrend in precious metals into an intermediate uptrend? Let me know down in the comments below. While you are there, remember to give this video a like, and I would appreciate it if you share this video with your friends. Have a nice day. Bye bye.